Have you ever traded and suddenly found yourself to be stopped out almost within a few seconds, over and over again? Have you ever tried to put on a position where trend has finished, or you think has finished, and it's continued, and you've been stopped out over and over again? Well, I'm going to show you why it happens and how you can avoid it forever. Hi, my name is Chris. I'm head coach here at the Trading Mentors. I've been trading for God knows how long, 30 plus years, and I'm going to show you why and how to trade like the 1%, not the 99% who fail. Did you know that 78% of all people trading today will lose all the money within 6 months? I'm going to show you how you can avoid that. This is an update for members, subscribers, my followers, people on my course. And what we're going to do is go in depth looking at our video analysis training, because most of the work these days is done on video. I've written many books and I've done hundreds of videos over the years, and I'm going to show you some of those which I've put together for the training. You may not understand them at this stage. You've not done the course, don't worry. If you're a beginner just signing up, then don't worry. We'll go through them in detail on a one-to-one basis. And so here we go. So this is what we're going to be looking at today. We're looking at order books, order blocks, rather, with buy and sell orders with key updates, harmonic patterns, why they work and how, weekly analysis, daily versus 4-hour chart, intraday analysis, charts and setups, price structure, how they work and why, divergence, as most of you know, I love divergence and trade it often. Gold trading setup, the gold trading compound your account. Gold scalping, I love scalping gold. The setup and how it works and why it works, and how to add trades for additional profits with zero risks. So strap on and get yourself a coffee, put your feet up and enjoy the video. Before I jump into the charts and start showing you how it works and why it works and how to be a 1% trader. 1% of the traders take 90% of the profits. Did you know that? And I'm going to show you how that works and how you can become one of those guys. So these are the 3 services that we offer. The signal service, there's no training with this, but I send you a copy of the chart and why I'm going long, why I'm going short, and a few details on technical analysis, and that's $49.95 a month. Gold trading course, well, this is specifically designed for people who want to become gold traders, in particular gold scalpers, which makes a lot of money, and it's great fun as well. You get my one-to-one support with direct messaging me throughout the trading day, so we can ask questions and get feedback and so on, and so you learn quicker. That's 197. 3 months trading covers everything over a 3-month basis, including gold, including Forex, the setups, the position trading, the swing trading, the whole shirt bang. Expect 500 to 2,000 pips per month, and that's 297. That's one-to-one training with me, Chris, your mentor. So on to the charts, and this is the first chart of many, so relax, put your feet up, have a cup of coffee, enjoy the next few minutes. So this is the first chart. This is the advanced order block chart. So what we have here are red zones and green zones. And as you can imagine, the green zones are buy zones and the red zones are sell zones. So these are really, really important. This is why the 1% make more money than anybody else, because they know where these are. And I'm going to show you how to draw them. So the first thing here, you might notice here we have some black lines, which I've drawn manually, which are much more accurate than the red zones and the green zones. The green zones and red zones are useful, but not highly accurate. So let's crack on with this now. So here we have 3 indicators. We have a stochastic, we have the RSI, and we have this funny looking thing here. You need training to understand it, but nonetheless, if you're on the course, then you will understand how it works, why it works, and how you can profit. Now, what tends to happen with prices, and I worked for institutions many years ago. We knew exactly where the stops were for majority of the people, so we knew when to get in. Now what tends to happen is prices move down, they hit a certain place and they reverse. But if you don't know where these order blocks are, we call them order blocks, but they're buy zones, they're sell zones, they're supply and demand, doesn't matter what you call them. They are really interesting areas where prices are going to likely reverse. So where, if you don't know where these are, for instance, at this point, people will think, oh my God, this is going to sell, this is going to sell, this is going to sell. And of course it reverses and you get stopped out. And doesn't that happen too often? If that happens too often, you need this advanced setting on your chart before you do anything. So this is how we calculate them. And so what we do, we wait for both RSI and stochastic to become oversold. Once it does, it then produces an order block. It produces a support line or resistance line. We don't know what it is at that point. It could be anything. It could be support, it could be resistance, it could get blown out, we don't know. But they're interesting areas where prices are likely to react, and that's the important thing. So once we've drawn these, so there's one here, this is gold by the way, and there's one here which we've drawn from a few days ago, there's one back here from a few days ago. So we can see that what happens is once the price is broken, in this instance here, it then becomes resistance. So it's going to be difficult for the price to break through it, and it doesn't, and it continues downwards once we get confirmation. The other thing about this tool down here, and it's quite useful, it actually predicts divergence quite accurately. Notice this here, achieving a double top within this red zone, then you have divergence, negative divergence, and the price collapses. Conversely, we have positive divergence. Overnight this was, so we didn't get into this one, but this was divergence overnight, positive divergence, and the price went up. And notice these green dots here, they are telling you that buyers are getting lined up to buy. The red dots are telling you that the sellers are getting lined up to sell. So these are really important areas. Now 90% of my profits, 90% of my trades are gold, and I scalp gold a lot. I rarely position trade gold, but I prefer scalping. It makes a lot more money. So here our 1851 is resistance, and the price is going to find it difficult to go above this. And as you can see here, the sellers are getting ready to sell, and this could be a big move down. So that's how we set up, and this can happen you can do this technical analysis on any chart. Of course, you can go through the whole charts, you can do 20 charts if you like, but at the end of the day, my focus is on gold because it makes 10 times more money than currencies. On to the next chart. In this chart, I'm talking about carry trades, position trades, trades where you're going to hold them for a few days or a few weeks. Doesn't matter really how long, as long as it reaches the targets. So this is the US Canadian, and this is going over a few weeks. One of the things I'm going to be talking about in the next few videos, in the next charts, is price structure. Price structure is really, really important to understand where the price is going and that it's achieving higher highs. So as you can see here, the chart is all blue and the ribbon is blue, and that's part of the software, and your chart should look like this if you're a member, if you're on the course. So what we have here is confirmation that the buyers are in on US Canadian. Here we have the RSI, and what I'm looking for in particular is the RSI moving above the 50 threshold there, because that indicates that more buyers are coming in. To get a better entry, this is the 4-hour chart, so we have good old order blocks. Order blocks are buy zones, as I call them. So you had a buy zone here, a buy zone here, a buy zone. So you had 3 chances to get into this. And we have the RSI, which tells us that the price is oversold on the 4-hour chart. And it's oversold into the buy zone. So this was a buying opportunity here and here. And in this instance, we use Heikin-Ashi charts as well. I've done another video on that. If you look at my YouTube channel, there's another video on Heikin-Ashi, which is really important. So Heikin-Ashi means red is sell, green is buy. And as you can see from this move here, there's about 200 pips or so, which you could have had. So this is a really good swing low, if you like, within an uptrend. So what you're waiting for, ideally, is for the price to confirm price structure, higher highs, and then waiting for the price to come down into the buy zone, the green zone, and then buy it on the Heikin-Ashi green conversion. On to the next chart, and this is the intraday chart. So this is perfect for you day traders out there, and these are the settings which are consistent, and it's very, very important that we again have a look at price structure. Whenever we see the red band, we're looking for sells. Whenever we see the blue band, the blue ribbon, we're looking for buys, and vice versa. So I have the 30-minute chart on the left and the 15-minute on the right. So price structure confirms in this instance that the price is highly likely probably to go higher. The other indicator we have here is the super trend, and we're looking for green or red backgrounds to coincide with price structure. So if the price is achieving higher highs, and it's a green structure background, then of course you can look to buy. Now the important thing here is that your stop is below the area of support, below the ribbon, and the first target on the pivot, R1 in this instance, it has a 90% chance of being hit. R2 has probably less than 50% chance of being hit. So always go for your first target if you can. The best way to manage this, in fact, is to halve your lots. Have 2 targets, one at R1 and one at R2, because they do get hit, obviously, in stronger markets when we've got high volume. So it's very important to know where your stop is, to know where your target is. And once the target 1 is reached on your 2 positions, you put your stop to break even on the R2, so that if it goes there, happy days. If you get stopped out, you've actually lost nothing but gained some profits. Now, as some of you know, I'm a massive divergence trader. And just to explain what divergence means, it's where the price, in this instance, this is the Aussie USD, is achieving lower lows, but the histogram, this is a MACD histogram, is achieving higher lows. So this basically tells us in advance that there's going to be a big move higher. And again, this is highly underused by many, but also the 1% use this because it tells you that the sellers are coming in here, but they're going to get stopped out. So why you don't have this or don't have this knowledge, again, is a weakness, and you're highly likely to keep getting stopped out again and again and again. And the institutions know this. So, but while everyone is selling the Aussie dollar, and at this stage they were, it's all over the place, sell Aussie dollar. And if everybody is 99% is selling Aussie dollar, I am buying it, especially when I've got divergence. So this is what happened. So I posted on about the 2nd of May that there's going to be a massive move on Aussie dollar. We had a trade here. You can see the remnants of it. and it was a 3.76 times risk to reward. So it was highly profitable. And this is a position trade. This is something you're going to hold for a few days at the very most. And you're not looking at it, you're making money overnight. That's the key. So the divergence was here, and the entry is once the price structure changes, and off it goes to the races. Eventually, might take 2 or 3 days, it doesn't matter, does it? Now, the hourly chart is one of the best ones to get this on. However, if you get to see a 30-minute chart, then you can expect maybe 30 pips, something like that. On an hourly chart, you can expect 100 to 200 pips. On a daily chart, you can expect 200 to 500 pips. So the longer the time frame, the bigger the move is going to be. So a very nice profit there. Again, if you need support on this or more information, I've written some books in the members area, and there's videos on the members area. So have a look. If you're not quite sure how this works and why it works, then please let me know. Most of my currency trades are all divergence, and I don't trade anything else really, except gold. So back to gold, and gold scalping is something which I love, and it's great fun. And you've got to be patient and resilient and disciplined, and I'm going to show you how we do that now. Before we do, we need to know again where the resistance areas are. So 1851 is a problem potentially for this price to go up any further. It's highly likely to reverse because we've calculated the previous low or high now. So the price is going to collapse from here down to, where's it going to go to? It's going to go to at least 1832 and maybe beyond, we don't know. So let's dive in and get a bit closer to understand our entry level. So price structure is really vital in order to understand the direction. So price structure tells us that if price is achieving lower lows. So this is indicated here by this ribbon, which you should have set up on your charts. This is a 5-minute chart, and the ribbon goes red and the candlestick goes red. The other thing to make sure as you enter a scalping position, and a scalp just means you're going to take quick profits. And I'm going to show you another technique in a minute as well, which gets you in even quicker. So this is almost like a day trade, if you like. But, this target here got hit. This is a 5-minute chart within an hour, I guess, something like that. But there are quicker ways to do it as well. But the first thing to make sure as you enter and the price structure changes, you're actually going with the trend which you've done the analysis on before. So the other charts need to agree first. So in this instance, a short position was successful, and the risk reward here was just over 2 times. Make sure every single trade is 2 times risk reward, because you will get stopped out sometimes, and that is one loss. That when you make a profit, that's worth at least 2. So here price structure changed and went up, and you could have had a 2.82 times risk reward here. Also make sure that your stop isn't too tight. It makes sure it's below the structure, and also a little bit more. So a 3 to 4 pip stop is fine if you're going to get a 10 pip reward here. On to the other scalping chart. The great thing about the 1-minute chart in this instance and the settings that we have, it makes sure you're going in the right direction. You can't second guess this. In other words, I know many of you try and sell at the top of a big uptrend because you see it as finished, or the other way around. It's not the way to trade. That's how you lose your money. So this chart helps you to understand what's going on and which trend is actually where the trend is. So here, for instance, we can see that the ribbons, and I've got a video on in the members area, the ribbon, have a look at that, combined with the super trend is excellent. And so this is the ribbon technique. So whenever we see that the moving average is stacking on top of each other, then this is buy only. You don't even think about selling it. Okay, so we have lots of signals here, but we're going to iron out some of those. You're not going to keep trading every two minutes. That doesn't make any sense. So we're going to iron out some of these and get better trades and better positions. So how we do that, we simply have two indicators. We have the RSI and we have the stochastic. So what I want to see is both of these oversold in an uptrend. Yeah, so I want to see price action pull back into the ribbon. If it pulls back into the ribbon, the better it is. And I'm going to explain where you put your stops and targets as well. So in this instance here, you had a signal, but notice here is a very weak signal. It's not oversold. Both need to be oversold. Now here's a signal, and both are oversold. So there's highly likely going to be a much bigger move. Now the wider the moving averages become, the gapping in it, the more oversold it becomes. So remember that as well. But on a pullback, there's another one there. So you could have had one, not quite there, two trades. And remember, when scalping, you only want two trades. Three won't work. I know you don't believe me. You're probably going the third time it'll work. You say, Chris, yeah, it did work. But overall, being greedy won't work. So two successful trades with scalping is it. Now, as you've seen from my Instagram posts and so on, my videos, I put on 4 positions. So here I'll put on 4 positions because the odds of this actually going up at this stage are very, very high. So I put 4 positions on, and then I will have a 4 pip target. I don't put targets or stops on my positions, but I will have a 4 pip target in mind. So this is 1847. Where did it go? 1853. So definitely at least 4 pips. 4 pips is usually the maximum you can get out of it unless something happens. So how do we manage this? Once we get a satisfactory condition and all our rules are satisfied and the conditions are met, then we start managing the trade. So this is how I work it. So we know that that signal is legitimate and highly likely probably to rise. So let's get a bit closer to the market so we can actually see what's going on. So in this instance, we can see we've got the arrow. So in this instance, what you want to do once you enter, you've got to place your stop on the previous moving average. Now you can, if you want to, if you want to hold the trade and continue, you can simply move your stop with that same moving average until it gets to break even. And then you're locking in profits. And if it goes to the moon, then of course you're going to make a lot of money. My take on it is to put on 4 trades with all 4 pips target in mind. I will take 3 off. And my 4th one I will bring back to break even. So if that does continue, then that one makes a lot of money as well. A very, very successful way of trading. Now you have to be in the market, in the trade. You have to spend that time analyzing it. So if you're a scalper, you need the time during the day to do that. Probably, an hour probably to get that trade and then focus on it. And this, for instance, would have hit 4 targets within about 10 minutes, 15 minutes. And that's all you want to wait, really. You don't want to be waiting about too long. Take the money and then off you go. So that's it. Don't forget that you can direct message me if you are on the course. If you're on the signals, you can contact me in other ways. But hope you enjoyed that. It's been a great video, and I hope you've enjoyed it and stuck with me for 25 minutes. But come back to this anytime. It's going to be posted on the members area, where it just highlights some of the settings that we use.